Further job weakness. Yep, makes sense. More cuts conditioned on further job weakness.
What's up, guys?
Let's see, we have here policy uncertainty. Easing could add to growth. Oh, that's an interesting way to put it. Policy
Fed hasn't hiked in years.
uncertainty, easing could add to growth. Okay. Yeah, that makes sense. Little room for further interest rate cut. Little room for further rate cut. Okay. Labor market risk weighted to downside. Labor market risk weighted to downside. And let's see here. Loose financial conditions. We talked about that. Balance of risk must shift further to justify lower risk. Balance of risk must shift further to justify more cuts. So really not in alignment with these three cuts that we've seen from Powey here. You're actually now getting some components of the Fed who are a little more aggressive here. Let's see. So Bostic, which is also good for the economy to some extent, right? If you have the Fed suggesting, hey, economy's good, they're bullish catalysts, it's actually good for the stock market. It's just, you have to be careful on what, right? So I'm going to write that down. Like broadly, Fed seeing strength in economy is bullish for stocks, right? It's more, it does lead yields higher, which slows real estate, related. But overall is positive, assuming they're not blind, unless they're totally blind to labor risks. This is what amplifies how important next week is. This makes next week super critical. And so, well, I guess we'll see. All right, so Bostic, we'll keep looking to see what else comes out from him. Nothing yet. Let's see. Bostic said he was comfortable with this decision because the risks were more evenly balanced. Okay, Fed cut by 1. That's fine. We saw this. Tariff-driven inflation has been more muted than initially projected because businesses have used various strategies and were spreading out or delaying the tariff impact. I think that's an interesting line. Bostic says tariff impact delayed as businesses spread out the impact of tariffs. It's like basically saying it's not all showing up right away at businesses, so therefore it's no surprise it's not showing up right away at our actual reads, our data reads. Signals from the labor market have become harder to read. Great. Workforce supply constraints explained around 1/3 of recent hiring slowdown, which means immigrants who legally entered the country last year could still be moving into the workforce. Okay, roughly. Okay, so this is also an interesting argument. This right here is a bullish catalyst, a bullish take. Bostic bullish take is that because of lower immigration, it's taking longer to fill vacant job positions, and therefore there is a supply crunch of good workers, meaning it's going to take longer for them to show up. Okay. Then, was that it on Muslim? Let's see. Okay. Fed Moz. Let's see. I don't actually see the Moz P. We see the boss. Okay, we basically have the breakouts of it. That's fine. Okay, so now looking at the 10-year, 10-year still flat on the day, still up obviously from the Fed meeting. How are we doing on the 10-2s? 10-2 to me is a little bit of a proxy for the market telling us like how serious does the market view the Fed's response to a weakening economy. Yeah, it's above 50, but it's certainly off some of the highs. When we got those 3 rate cuts penciled in, we saw the lowest level we'd seen in a while, about 52-ish. I want to say, look at that. We actually got down to about 48
Shopify.
before the Fed meeting there. Okay.
Squarespace.
So let's see here.
Wix.
Okay, Q's now up 13 basis points, nice and positive. Bitcoin's at 113.3. Iran keeps running. Tesla's up 420 basis points. That's pretty nice. It's almost 444. That's actually really impressive. Yeah, look at that. 444 is 0.44 is where in the minute there it rejects. Pretty dang impressive. So then we've got Apple 251. The boom continues. Remember, we saw that piece last week about the information reporting Apple's quote unquote rushing to produce cheaper iPhones and more of the normal model of the what's it called, the iPhone 17. So essentially not necessarily saying there is fewer buying of the Pro, but just saying, wow, we're getting so many orders, we're going to step it up. Hey, that's good. All right, what is back to 30? It's impressive. We've got, what else? Palantir 180. Meta, if Apple moves, nice. Okay, let's also pull. Sometimes we get some doomer info over here. Putin offers the U.S. a temporary nuclear control deal.
All right, guys, let's jump into a little breakdown right now.
This is Sam Putnam.
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 There's one stock that's about to break out. The Opendoor CEO is the former COO of Shopify, where he said to the Canadian government, do this, chill on the tariffs. Now he's over at Opendoor. You saw what happened with Opendoor, and Shopify is setting up to break out as well. Let's take a look at the Shopify chart. It's peers, Wix, Squarespace, and where to get in. Here we go. This is the chart. On Wix, we have sort of an unplayable stock here on Squarespace. This thing moves very little each day, so there's no point in even trading this. This is the move we're looking at. Shopify is brushing up against that 150, 155 left side peak from earnings. It does have several compressed days in a row, making it attractive to get in with a high reward, a low risk. And if we zoom out, we're coming out to this left side peak from October of 21. And did Shopify take a dive in 2022? Yes. Did all the tech stocks take a dive? Yes. However, right now, you have this opportunity where it's right around this 150 whole dollar level. You can risk a couple bucks and make what looks like $10, $20, $30, if not more. Okay? Shopify has been the arming the rebels story. That's how they're known. Giving small businesses an e-commerce website of their own instead of relying on Amazon. Of course, Amazon has been on a tear and followed a very similar arc to Shopify, came down in 2022, came back up. Shopify with a smaller market cap, of course. This is the important level, 176.29, and then holding above this 140 level where it went off a cliff in the beginning of 2022. We can see we broke out from there, and that's why it's on the radar at all. And then right now, when we zoom in on a daily chart, we see an even more granular opportunity to get in. We came down, held a higher low, stayed up, surfed a moving average, and now we have that tight risk reward opportunity. All right. Now, we do want to make sure we know a little bit about this company. If you're not familiar with Shopify, we do have some solid analysts reflecting price targets above where it is. Okay. That's what they do, but it never hurts to see those. Of course, this Q2 earnings was this massive growth in one day. Okay. But we're well past Q2 earnings now. We're into mid to late September. This is the Opendoor CEO, okay? He did voice criticism of Canadian policies, maybe following in the footsteps of his boss, Toby Lutke, at the time. But now we have to look down and say, okay, Opendoor is beyond us. We don't really have to worry about the Shopify tariff challenges too much, okay? Because they are the e-commerce platform, they're not actually the e-commerce customer. However, of course, if there are fewer sellers on Shopify, they're not going to be able to pay for Shopify software every month. So it is a big deal. That is why the Opendoor CEO made those comments. The Shopify CEO made those comments criticizing tariffs. Now, the Canadian market is smaller than the US market. Shopify did initially start in Canada, but now that's not as important. With all that said, though, their headquarters and original their origins, I mean, Toby immigrated to Canada and started, he wanted a place to sell his snowboards online, and then he built a solution and then ended up selling the solution, and that became Shopify. So they are kind of like a darling of Canada, so their voice is definitely going to be heard. I don't think we have to look too deep into the exact tariffs, but it is what it sounds like, okay? When tariffs come into place, e-commerce stores just have to decide, are we going to raise prices? How are we going to tell our customers that? And are we going to have to basically huddle down and wait for this storm to pass? This was part of what they're protesting against. If any good was under $800, that was allowed a duty-free entry. You've probably heard about duty-free shops in Canada. You can buy alcohol for, less. But that is no longer the case, okay? And that's a real problem because merchants drop shipping from China and Hong Kong, that is a lot of Shopify customers, okay? Think about every single mom and pop getting on Shopify being dwarfed by the number of individuals suddenly becoming quote-unquote entrepreneurs by slapping a logo on a product from overseas, not realizing that these tariffs are a problem, okay? Stock is above that 150 level. We saw it on the chart, and that's positive. It's up a lot. We looked at it in detail. But now we just have to say, okay, how are these tariffs going to progress? This was a couple months ago, and Shopify is staying resilient despite that. So we do have to keep an eye on how Shopify develops as a platform. We do know it's easy to use. If you haven't tried it, it's pretty simple. There is a coding language called Liquid templating that I have used that is helpful, but you don't even need that to have a fully functional online store, which is why they've grown so much. Never hurts to have it even easier to develop a store. There was a recent acquisition from their competitor Wix. Wix bought a company called Base64, which creates a website just based on you typing in some words. I have tried that as well. Creates a web app, actually. It's pretty much a game changer. 80 million acquisition is no joke. And Shopify is making some acquisitions as well from a former Pinterest team. I don't know that these acquisitions are in and of themselves needle moving for the stock price, but it helps to make everything more efficient. I've personally talked to retailers who have in-person stores on Main Street, the Main Street in this town I'm in, which is a nice Main Street, and they just say they've tried Shopify and it's just too much. It's laborious putting all of their one-of-a-kind items on there. So anything Shopify can do to make it easier for customers to search and easier for boomers, really, is what we're talking about, who have large retail in-person presences who need to just set up a store and really have trouble with it. So we'll see how well this works, if it is equivalent to Wix's acquisition that they made of that Base64 company for 80 million, which is significant. 80 million is not significant compared to Shopify's market cap, but it could grow into something bigger. Otherwise, they wouldn't have required it. Shopify is also an ecosystem for app developers, but they are starting to take a piece of that, which is good for us as investors. 15% is going to start to add up. And it's coming at a time where developers have concerns, but where are they else going to go, right? It's kind of like the App Store for Apple having a monopoly on apps. So we don't really have to look into controversies too much. I don't think that's material compared to the other movers of the stock. So this is really what we want to pay attention to. Wix, which we looked at, that's the most similar sort of offering. It's really not similar in terms of serious e-commerce sellers. BigCommerce is a little more similar to Shopify Plus, which e-commerce sellers have to give a cut to Shopify, but so they end up paying more for the software and less in terms of payment processing. So that's how Shopify Plus has been able to edge out companies like BigCommerce, besides Shopify just being easier to use than these other websites. Squarespace is kind of an entry-level thing for, designers or people who just want to throw up a website to say, come check out my farm stand. Now, I could be downplaying them a little bit, but again, we looked at the stock and it's basically been going sideways. So pretty much spoke to that comparison. And at this point, all we really have to do is look at the stock chart. You could say nothing that I just stated matters, and you could say, I don't even know what Shop is. This is a grocery store stock. And I could say yes to you, and you'd say, oh, looks good. I think I'm going to buy it. I like food. The dumbest people sometimes make the most money in the stock market because they are visual creatures, and they say, look, this thing is going up. And to which I would say, you're not wrong, okay? Could it break down here and fail? Could the broader market break down and fail after we've had this just grinding up for the past 3 weeks? It could, okay? We could definitely take a breather here. But in terms of companies to buy with low risk reward, and should the market continue coming up, moving up, it's hard to bet against this company and this ticker and this price action in this exact spot, okay? Because look, you can stop out for just a couple dollars, but if it does keep moving up, you've got $10, $20 more of blue skies up to that 176 level we saw from back in late 2021. So that's Shopify. If you like this sort of stock idea talk, head over to stockscommunity.com. You can read that store page, look at a couple testimonials, and try it out for 7 days for $25. Pretty reasonable, affordable opportunity to discover, get welcomed into that community. And if you haven't hit that subscribe button, hit that button right now so you get notified of these videos as soon as they come out. And I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Let's jump into some Chris Sane here.
What's up, YouTube? You guys ready to make some money? If so, let me know down in the comments below. As always, I got a jam-packed video for you guys, so please keep it locked. Please make sure you like, subscribe. Help this video get at least 1,000 likes. Without further ado, let's go ahead and dive into it. Real quick housekeeping, guys. Take advantage of free, okay? Check this out. When you deposit into Moomoo for a limited time, guys, you can get up to $1,000 in Nvidia stock, and or if you got cash, aka dry powder, you could be earning 8.1% APY inside of the Cash Sweep program. Do me that favor. The link for that stuff will be in the description below. But check it out, guys. Here's some things I have for you that I want on your radar to end the month, but also if you can't get it now, get it before the end of October. It's going to serve you well. I need you rocking out with me to crush the end of the year, okay? We ride the last 3 months into the new year on a high note, okay? So please put these on your radar, guys. I'm gonna get right into it with the first one on my list. Put this on your watch list, okay? Hood, Robinhood, okay? Ticker symbol HOOOD. It's currently sitting at 124 right now. I'm looking for either a pullback for a better entry, but you can enter here as well, and then a push to test 130 and above in this, okay, guys? This one is doing its thing. It's definitely flirting with and making new all-time highs, so be along for the ride. Be in the right place that is going to move, okay? And then while your other plays are bubbling up and kind of simmering and consolidating, when you make money off of the plays I'm gonna give you today, you go and buy those so that you got your blue chip stocks squared away, okay? What else Coach got for you? Palantir, ticker symbol PLTR. Guys, if you've been with me since 8, you already know how this has blessed your life. But beyond that, it has more room to run. Matter of fact, this ain't even hit my $200 price target yet. So you guys already know. And so if we can get that by the end of the year, that will be cool. But if not, guess what? It's going to still hit 200 by 2026. In case you didn't get this at $8 or $12 or $20, okay, you need to be looking at pullbacks, okay? Like 168, 163, that type of stuff. Those are the new levels to get in. I'm not recommending getting in that high, but I'm more or less saying when you see opportunities, there's levels that you can operate within to still take advantage of the next move that's coming. Does that make sense? New all-time highs begets new all-time highs. And so I have told you from day one, every level that this was going to hit. But now that we are up here and we are making a whole new set of levels, okay, now what's on our radar is a test of 200, okay? So from 182 to 200, that's a significant move. You need to be in it so you can take advantage of it, all right? What else Coach got for you? Coinbase, ticker symbol COIN. Guys, this is more of a technical situation that this came across my radar with. And you guys know I'm a technician. Matter of fact, I am a surgeon. So I like to play a play that I see can have a quick turnaround for you all, a blast off, and then compared to strategy, for instance, coin has a little more leeway. Like strategies closely tied to Bitcoin, whereas this you have different factors that can help this continue to propel higher. Okay, so
I don't know about Coinbase, but Palantir
well,
definitely
all right?
was a good entry a couple days
is
ago, and
COIN. All right, everything
I would be watching it for pullbacks for
unpacking
sure.
today, you can buy shares of. Okay, you can get shares of everything that I've covered so far and everything that I'm going to continue to cover. Okay, because again, guys, I want you to have a two-pronged approach when you are in this game. Okay, the investing is the most safest way, and it's the most guaranteed way to build your wealth. All right, that's what you should be doing. That's what you should be thinking, with a 1 to 3 year minimum outlook. But 10 years, you're going to get some magnificent returns. Matter of fact, unreal returns that can change your life. A lot of times with me, because I'm giving this, guys, to you from a technical perspective, you don't need that much time. But the responsible thing, the conservative thing to do is to ensure that you have that much time. Okay, that's when you can see the magic happen, especially where these plays are going to ultimately go in the long run. All right, so that's Coinbase, guys. Keep this one on your radar. Uber, look at this one. Now, I've been pounding the table on Uber since $20. I had $100 price target on this. It is at 98. Remember, I told you certain plays got to knock on the door 3 times. We are up here again at 98. It keeps getting up here and getting smacked back down. Up here, smacked back down. Here's the thing, guys. When it goes back down, you have to still remember the price target that I set before you, okay? 98 ain't 100, okay? 98 is not 100, so we still got to get to 100, and it is my belief that when we do, it's just going to take off, man. I've seen this movie too many times. I have seen this movie too many times. You guys know sometimes, like, I'll give a target, like, listen to this, Netflix. When Netflix was $700, everybody on the same gang, everybody on the money team, we all bought Netflix. Boom, it took off and hit 1,000. But then it went to 1,100 the next day, 1,200 the day after that. You get this. I can see once this hit 100, I can see 104, 112, 116, 120 all of a sudden. Does that make sense? So Uber, guys, please put this on your radar. This is the number one robo taxi. You guys are familiar with our Lyft play. You guys have eaten off that, but you can eat off this too. I taught you a long time ago about the stock market having cousins in the market. So Uber and Lyft, Lowe's, Home Depot, Microsoft, Apple, okay? The list is long and strong. FedEx, UPS, okay? You can just do this all through the market when you learn this, okay? So if Lyft is going to hit my target of 30, what do you think Uber going to do? Okay? So be thinking strategically like that, and be thinking of ways you can benefit, all right? What else we got? MU, all right? MU, Micron Technology. Again, this was more or less a technical setup. Sometimes when the focus is on like Nvidia, when the focus is on AMD, when the focus is on AVGO, it's easy to overlook players that's going to get busy too. MU was one of those ones that gets busy on the low. And I'm always looking for the underdog. I'm always looking for the low-key cat. I'm always looking for the overlooked asset, individual, the whole nine, okay? It just fits my whole motto. And so MU is one of those ones where everybody is playing all of this. You guys can get busy with this one, okay? Put that on your radar, okay? I'm giving you guys variety today just because I told you, when you learn how to fish, you will realize there's a bull market somewhere all the time, okay? There's going to come a day when tech is down, and then I'm going to teach you guys about commodities. I'm going to teach you guys about energy. I'm going to teach you guys about all the other sectors that is going up so that you don't ever feel like there's a lag. It just might not be the sexy plays that will be up when that time comes. Okay, think 2021, 2022, for example. What else I got? CrowdStrike, ticker symbol CRWD. Now listen, CoreWeave didn't make my list, but CoreWeave is part of the money team, and CoreWeave gets busy. But for right now, CrowdStrike, again, it would not behoove me if CrowdStrike went from here to $1,000 in the next 3 years, okay? And if not sooner, depending on how things go with AI, earnings, and some of the fundamental things that can factor into the technical things, okay? That's when you get that perfect blend. And then don't let there be a short squeeze of some sort, okay, guys, because then we have the potential for this to even do numbers. But have this on your radar. With the emergence of AI, you're going to want something to defend against some of the dark side of the AI movement. And CrowdStrike, I feel like they have been well positioned, and they'll continue to be one of the key players in this game. Look at all the companies that already is aligned with CrowdStrike, and you'll see what I'm talking about. Do your homework, okay? And then last but not least is Lyft, okay? Ticker symbol LYFT. If you have made money with this play, let me know down in the comments below. If you are...
Okay, let's jump into a little breakdown here.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
There's one stock that is about to skyrocket, in my opinion. It is a solar stock. Ticker's NXT, Next Tracker. Solar is a hot sector right now. You can look at the ETF TAN, that's the solar ETF, and see that it's positioned well, okay? Rate cuts helped solar stocks. When rates are lower, you can finance these solar installations more easily. So if you're interested in finding a stock in a sector that's not AI, that's not AI infrastructure, that's not batteries, that's not nuclear, that's not quantum, this is a safer long-term play. Solar production is growing. Let's look at the chart and jump into where to buy this. All right. Here is the solar ETF TAN, starting to turn up, coming up towards this green line, okay, which is, you see when it jumped under this green line, it really went down. So this will be an important level to say, can it hold that? Now let's look at NXT, okay? This is a 5-year chart, so it's a little choppy on a 5-year, but when we really zoom out, we can say this is about the important level on a quarterly chart, 63, okay? And now we're trying to look at this stock's been listed for a few years. It's holding at this level. Just in the past month, it's been in this channel and started to break out here around 72. And like I said, we don't really have to worry about anything because we're well above 62 right now. Okay, so it's blue skies ahead. No pun intended. It is a solar company, and we have these tight days and this shelf. Also, not a reference to a shelf offering, just this line right here where this is a great spot. It's also at a whole dollar level, $70, where we can risk $1, make 5, 10, 15 or more, okay? That's the name of the game. Did have some volume come in here, which was sort of just some digestion. The stock went sideways. But we have seen volume on green days. We've seen volume on red days. That's after earnings, though, so that's a special situation. So if it can go sideways, volume can dry up a little. There's a good opportunity to get in before big volume comes in, and this thing starts to move up. It's kind of similar like it might have done here, or like it did do here. I'm saying might have done here because this is a little bit of an unplayable situation, okay? I wouldn't have advised buying this. It just so happened to move up then. Now, what are we looking at, okay? Why this stock? Well, there has been some recent news that's relevant. we don't have to worry about this little sell here. It is 2 million, but this company is big enough that it's not really worth worrying about, okay, a sell like that. So I would say in general, when you see a company like NXT, this is actually a scan I use. I do talk about this in the Discord at stockscommunity.com. But all of these companies are companies that move 3, 4, 5% a day, okay? And out of every single stock on this list, these are all above $1 billion market cap. NXT seems like it's one of the most favorable at this exact moment. And the reason I say that is, look, I have them listed by market cap. Look at Nvidia. So that's something you necessarily want to buy right now? Maybe, okay? Probably not when it's so correlated to the market, and the market might take a breather here after it's been going up for a few weeks. You know, AV Go, is that something you necessarily want to buy? It might bounce off this 20 moving average. Might not. Tesla, is that something you want to buy? I guess you could risk here and then buy it, but it's up already, like, what is this, 30% since Elon bought 1 billion shares. So look, there's a reason we're talking about lesser known stocks here. Okay, and this is a big enough stock too where it does have some safety to it. When I search the dilution on this, it's not even worth listing in this dilution database. And it did have a recent agreement in June, which is just a couple months ago, to power one of Europe's largest solar projects. Okay, it is a partnership with a Greek company, and you have to think that powering almost 2% of the country's electricity per year is a pretty big deal, okay, for a solar company. So that's basically the name of the game for NXT, okay? European customers, as well as these acquisitions. And they're literally focused on technology that follows the sun. So they're definitely in the AI and robotics business before this was even cool. And that's pretty forward-looking. I wouldn't worry too much about comparing it to these others, except to say Sunrun does look pretty solid, okay? This is what Sunrun looks like. It's starting to turn up. This is probably equivalent, if not even a safer bet than NXT. I've already talked about Sunrun, so that's why I'm talking about NXT as well. Sedge, not so much, because it already sort of undercut here, bounced off this moving average from this, well, you know, overcame this left side peak, you could say. And now it sort of is not in a great spot to buy, right? Because you have to risk like a few dollars to make, you know, $5 or more. So it's easier if it sort of cools off, establishes another base, or has some type of breaking news, then it might get interesting again. If that breaking news were again to result in a base, but I don't like to look for news and then just hop right in like a fast follower. I look for these opportunities like we're seeing in NXT, where it's sort of, you know, is at an important level and starts to base and then gets up there. So those are the solar stocks, NXT and Sunrun. Again, you can check the channel for that Sunrun video just in the past 10 days. I think probably even the past week that was listed there. But if you do have any questions about NXT, go ahead and drop those in the comments, or if you're in the community, that's also a place to chat about it. I don't think any of these big names are that notable, except to say they're probably notable for people actually in the industry, because a gigawatt, this is almost a gigawatt. These are large amounts of solar power being deployed. So this is definitely a real company. We talked about how they are international, and this is not a small convertible. So I guess this is convertible debt that hasn't been converted to equity yet, but it's still a large debt investment. So I don't know necessarily if it's going to have any crazy moves in the near future. It is a recent IPO. That's only 2.5 years ago. But if we look back, it's only now that it's at all-time highs, and we don't really need a crazy move like here where it broke out of this channel, the upside, for it to be favorable for us in the near future. Okay? So even though we talk about open door type moves, what we really want as successful long-term, mid-term investors is a lot of base hits, and this provides a solid base hit spot where it could, rocket to the upside. But more importantly, as I mentioned, and I'll mention it again, I love these opportunities where you can get in here and you only have to risk, $1 or so to a whole dollar level. That also $70 lines up with this previous line. And you could say, technical, schmectical. It's like, yeah, well, actually, people do look at these charts. Algorithms do look at these numbers, okay? That's how they work. To simplify what I know about them. And what it shows is that there was not demand above this level until just now. So it's very relevant. Well, with all that said, if you like this talk, if you like, maybe you're more focused on charts, maybe you're more focused on what the company does, I like to mesh those two. I think that's how you get the best opportunities, and that's what we do over at stockscommunity.com. You can drop in and join for a welcome offer of $25 for 7 days. Check out those testimonials on the store page, and I hope to see you in the community. If you haven't hit that subscribe button, wherever it is down here, hit that so you get notified of new videos.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump into a little bit more of, I don't know if it's best to watch Chris, Sane, or Kevin. I think we're going to go with Kevin right now.
For these, here's just sort of a list of some of the caddies here. Nothing super exciting with any of these this week. It's pretty boring. But I think they gave us a Fed speak outline as well. Fed speakers this week. Okay, here we go. And this was posted today. Good. Today kicks off where Williams should mirror. Okay, this should be bullish on yields coming down for Williams. Muslim and Murad will be on the tapes. Tomorrow, Powell. Oh, look at this. Powell will give a speech tomorrow. Likely similar to FOMC rhetoric. I agree. Bowman will speak. Thursday we'll see Go speak. A lot of Fed speak. Holy smokes, this is a lot of Fed speak. Trump will likely, within his earlier, address the UN. That's fine. Yeah, kind of boring. A lot of Fed speak. Should cover that. That'll be fine. Oracle will secure the or the TikTok algorithm. This is also very interesting because you have a lot of control by, frankly, the Republican Party of the of media. And I think TikTok, this idea that American patriot investors are going to have control over the TikTok algorithm, I think it's really just an extension of basically Republican, domination. And so it wouldn't surprise me that, the next election has a pretty dang skewed TikTok algorithm in favor of one party, which creates some interesting nuances. Like it's now moved from who is good at social media to who controls the algorithm? That's wild, because you could have really great Megathron. Why don't you email us at staff@meetkevin.com? There you go.
Email staff@meetkevin.com.
Yeah, because nobody else has problems opening it up, so you might have like a login issue or something like that that's very specific to you, and we're more than happy to help you with that in TikTok or in email. You said you did. If you just emailed, you got to give. It's 7:12. People show up at the office at 8 a.m. You know, you got to give people a chance. So if you emailed within, like, I don't know, over the weekend or this morning, you got to give people a chance. I mean, what do you want me to do about it here? Anyway, TikTok's parent company ByteDance will create a duplicate algorithm and lease it to the U.S. Okay. That's also very interesting. So, let's see here.
He's on California time.
Let's see. Oracle will retrain the. Somebody's like, hire Indian support, Kevin. We rarely have people who need support. Like when people sign up for the Meet Kevin membership, they watch lecture 1.0. They don't screw up how they type their email, and then there's no issue. Like most of the time, it's fat fingers in emails, or people use the wrong domain, or whatever. Mario says, I got an email back this morning already. Oh, well, that's awesome. Good for you. So let's see. Oracle will retrain the algorithm and safeguard user data. See, that's what I'm worried about, is what you actually have. Member for 5 years, never an issue. Oh, that's awesome. So this is very interesting to me. They're bluntly saying Oracle will retrain the algorithm. I personally think this is just essentially a blatant way of saying, hey, the Republican Party will be running TikTok. It'll be an extension of Fox News, spelled F-A-U-X. Okay, let's write down some of these TikTok notes, because there's a lot going through. TikTok notes, a lot of data about this. Okay, we've got ByteDance will hold less than 20% of TikTok, and then we feel confident Trump is confident China has approved the deal. Okay, so to be determined that they actually do. No plans for more talks. Okay. Then we have, that's an interesting way to do it. Oracle, Silver Lake, the Murdochs from Fox News are all expected investors. Michael Dell, potentially as well. Oracle will study the algorithm and here it says retrain it. Retrain the algorithm. I don't know how I feel about that, but okay. Let's see here. No government selected board member or golden share. Okay, that's interesting. So no golden share from the U.S. Here you can see them. No golden share for U.S. No government official on board of directors, to clarify that. Which is probably, like, China does not want that. The U.S. is not taking equity. These updates are all just coming through right now through Reuters.
All right, let's jump into a little breakdown
Oracle
here.
will provide security.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
There's one stock that is about to break out, in my opinion. This is not financial advice, but putting $500 in this stock seems like, in my opinion, the best place to put it. The stock is DAVE, Dave. It is a fintech app. They did get investment from FTX's venture capital arm, which is bittersweet because FTX did perform exceptionally well using its venture arm. Those investments have been exceptional. However, of course, FTX is not a name you want to be associated with. So they've since repurchased that stake, and the stock itself, Dave, is doing great. So let's take a look at the chart and make sure we can find a spot that looks interesting here. Okay, here's the chart right now. You can see we're surfing this line. Okay, if you don't have this line on your chart, your Robinhood, your Webull, your Schwab, your TC2000, your TD Ameritrade, Thinkorswim, whatever charting software you use, interactive brokers or the like, that's okay. Okay, you can kind of see it visually anyway. But it never hurts to have some of these moving averages just to take a look and say, whoa. People are definitely looking at that moving average. And if not people, then some machines are, because look at how much it surfed that. And look at back here how when the moving averages start to converge, when the slower one catches up, aka the stock moves sideways for a long time, it can lead to big moves to the upside, okay? Is that going to happen again right now? You know what? I think this is one of the most strong stocks that I see in the market right now. And it never hurts when you're coming up to a major whole dollar level that I like to talk about, 250. And that level is significant because here it dipped right after earnings. So that's earnings related. However, if it can hold that pivot, that's super bullish. It does have these higher lows. And if we zoom out, 20 years doesn't really make any sense because this is just from 2021. Okay, where this was listed, but you can see the quarterly chart. We have a bunch of volume and people are buying the stock. Okay, so this is even greater volume than it looks like, given that the price is, doubled and the volume also doubled. So really it's like the amount of money pouring in quadrupled. So this is an important level, 315, call it. And then way up here, if it gets up here, about the $500 level, 490. But if we just think about 315 and we see we're at 240, you have a pretty clear level just in the past, say, couple months to risk off of. Whether it's just in the past couple weeks, 230, and you're buying at 235, you risk $5, you make up to 50, maybe $20. But 315, that level we looked at from the left side, is way up here. It's above this level. So you have places to see how the price reacts around that level. And if it does get up there and then comes back, you can also sell some when one of these lines catches up. You don't necessarily need the lines again, but if it goes up, comes back, hits one of these and starts to go below it, that's another way to know that you want to sell. So this is super deep in the weeds. So for people who are really into watching their portfolio on a weekly basis, on a bi-weekly basis, they are excited I just did that. But if you're more interested in, hey, I like to know what I'm buying, okay? I sympathize with that. I like to know what I'm buying too. And look, Dave did repurchase the convertible note, okay? And they got it at a discount, which was a little bit of a fortuitous situation, okay? But I guess the trade-off is that they're still a little bit associated with this initial investor, okay? But they're no longer affiliated, and now we can look up and say, what else, is going to be a problem for us. And there really isn't any overhanging supply. Okay, no one is really expected to sell. Yes, insiders do own 20% of the company and they can sell. But that so far hasn't looked like it's been happening. Okay, the stock price looks good. And they did, expand their repurchase authorization. A lot of tiny companies do that and say, we're going to buy back our stock. And what you actually have to say is, well, did you or did you not? Okay. And look, they are. Okay. They'd purchased 25 million, 50 million of that expanded authorization. So that's a significant amount. They're putting their money where their mouth is. And they do have some signs that they are actually working on, being super cozy with regulators and providing new offerings, fee-free access to a bunch of ATMs through this is probably like a Plaid type platform. If you ever use Plaid to log into your bank account through some type of money transfer service. The convenience is the reason why these Dave type apps are so popular. Is the convenience is just unmatched compared to you used to have to call up your bank and wait a couple days. It takes 3 days to send a wire transfer. It's crazy. Okay, but they're making moves to partner with existing financial institutions, and also it looks like taking some steps to bank the unbanked or the underbanked, and just expanding that sort of monthly active users number that you like to see for an app. Now, these companies are not publicly traded, but if there is any news about these listing, that will affect Dave's share price. So we're going to want to keep an eye on this. You may have heard of Earnin or Chime. Moneyline's been around for a bit, but these other ones are starting to advertise, mainly social media advertisements. I haven't heard of Beam, but maybe I'm not looking in the right places for the ads. These are the publicly listed comps. Okay, PayPal, Lending Club, Upstart, SoFi. I think you could put Affirm in that category as well. And Affirm looks okay. Definitely at higher lows, is coming up to this major level. Volume drop. It looks pretty good, actually. Upstart is not one you want to buy. It's just sort of hanging above this green line, which you really want to sort of have some distance here, like Affirm has had. Okay, that's the 200-day moving average. It's sort of a well-known indicator for people who invest large amounts because it's slow moving. Everyone's looking at it, even on different time frames. And then Lending Club, it's just sort of grinding up. It's solid, but not quite as interesting. And then PayPal looks a lot like Upstart, so not super interesting right now. So that's why we're looking at Dave. Okay, these higher lows are really powerful. And then I didn't actually mean to zoom in there. I meant to zoom in over here. But if we really look in here, we can see we have a spot to risk off of. And, today's low actually sort of coincided with that high. Well, pretty close. So those are the kind of opportunities where if you're really, looking for a way to risk very little, which I know a lot of people who buy stocks who, want to buy stocks and not lose money, they really look for these type of opportunities where you can risk, a couple percent or whatever that is. We see this little percent sign, it's a percent or two, the distance from here to here. So, you put in $100,000, you risk 1%, you lose $1,000. So, of course, it goes up. You make, 10,000 or more, depending on how you sell, if you sell into pieces, if you trail one of these lines and sell part, and then as it comes back, you sell more, or what exactly you do based on your own risk management. But that's why we're talking about Dave. We've talked about the risk part. We've talked about the other companies. I don't think SoFi is really that correlated with Dave. Looking at the chart, SoFi just sort of grinds up. So I don't think that's necessarily that important or helpful to look at. But I do think we want to look at basically any type of news that could come up. This is an online bank, so it's, these are some of the type of thorns that upstart, a newly started and ambitious company can, like Dave, can find some friction with. So we'll see how that progresses. Hopefully everything's above the board, and hopefully we'll see that insiders are not selling too much. I mean, 3 million is significant for an individual, for sort of a small cap to medium cap company, but not significant in the sense of the amount of dollars that this company trades each day. So we can see each day it's trading, 100 million, 200 million per day. So that's Dave. If you like talking about stocks to buy, if you like buying stocks that, we pick them because we think they're going to go up, head over to stockscommunity.com. You can try it out for $25 for 7 days. See if it's worth it. There are a couple testimonials on there. And if you haven't hit that subscribe yet, button, hit that. It helps you get notified of these videos as soon as they come out. And I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.